to open up the financial sector will be implemented in the next couple of months. One of them is a change in shareholding limits on foreign-funded banks.
We will abolish the shareholding limits of foreign-funded banks and financial asset management firms, giving them the same treatment as domestic banks. Foreign banks will be allowed to set up branches and subsidiaries at the same time.
There also will be new measures for the trading of securities.
The shareholding cap will be lifted to 51% for foreign firms of securities, funds, futures and life insurance, and the cap will be totally removed in 3 years. We will no longer require that foreign securities firms must have at least one Chinese securities company as a shareholder. To further improve the stock connection mechanism between the mainland and Hong Kong, we will quadruple the daily quota for stock trading under the mechanism.
For the insurance industry, China will attract more qualified foreign investors.
Qualified foreign investors will be allowed to engage in insurance agent and assessment businesses in China. We will allow foreign insurance brokerages to expand their business scope to the same level as Chinese firms.
China is also encouraging foreign investment in trusts, financial leasing, and consumer finance. According to the central bank governor, these new measures will be launched by the end of this year. Gary Engelbrandt, CGTN.
For more on this, we're joined by Professor Patrick Bond, a political economics expert at the Wits University in Johannesburg. Professor, China is further opening its doors and promised to work with partners in development. How should Africa position itself to benefit from these policies?
Well, first, great to be with you. The first thing is that the potential avoidance of a trade dispute with the United States has both good and bad implications for Africa. And I think the speech by Xi Jinping was useful to cool the tensions. On the other hand, President Donald Trump is behaving in such an extreme manner that, for example, African exporters to the United States should be just as worried as Chinese traders are about how erratic the US president is. So one day he declares that China is the major economic problem for the United States with a $375 billion trade deficit that the US has with China, and that he will respond to that, especially on intellectual property, especially with new tariffs. And then the next day after the speech, Donald Trump is tweeting how grateful he is. This is an erratic man, and for Africa, with the African Growth and Opportunity Act, with the United States having especially important export potential for cars in South Africa, for oil from Nigeria and Angola, for light manufactured products. This erratic behavior is something I think we should all be rather worried about, and I would have wanted to see the Chinese respond with a little bit more coherent and globally responsible leadership rather than appearing to back down.
Now, Africa is already witnessing significant growth and development, working together with China on innovation and education. What other areas will be important for the continent?
Well, as you know, we've seen the commodity supercycle allow Africa rising rhetoric to emerge about 5-6 years ago. However, the commodity price cycle peaked in 2011, and that was really after China had finished the big building boom, particularly the urban development and some of the major transport public works. Now the question is, will the Belt and Road Initiative revive the commodity prices? Because in 2015, when they crashed, Africa hit an extraordinary pothole, not only with the decline in the prices of major exports, but also with the problem of repaying the debt. And some of that is Chinese debt. Most of it is Western and multilateral debt. And to some extent, in a country like South Africa, some of the debt is being questioned. For example, the China Development Bank's loans to Transnet that afforded China South Rail locomotives, which seem to have been involved in the state capture corruption associated with the Gupta brothers here. Now, these are all very critical economic problems, and even if China has been very generous with building buildings, sports stadiums, educational initiatives, cultural exchanges, this will be the big question in the years ahead. Does the Belt and Road Initiative revive the demand for minerals and allow new infrastructure and new export-led growth. I fear it won't, because many of the drivers of the world economy are beginning to stall, and the big trade dispute and the crashes of Western stock markets in the past few weeks is just one indication of that sustained overcapacity and financial liability that really represents a major worry for us all.
Professor, we appreciate those insights. Thank you very much for joining us. Professor Patrick Bond, live there in Johannesburg.